25 Eastern time in the final hour session. It is Wednesday, September 3rd. Couple of good trades today. Took a nice winner on daily profit play. Just had a nice masterclass with my double up service. Took in that winner on similar strategy. I was actually in the middle of discussing it. We're talking about that more in day two tomorrow, but ended up grabbing about $130 net profit. It is still looking, well, I take that back. Actually, it's looking worse now. So I'm kind of glad that I protected a profit. This will be something fun to watch here the next 25 minutes or so, in the next 30 minutes. So I initially took a trade here for $16 credit, and it's trading down to about $13.20. So it's up just under $300. I closed out the trade for $12.75. So I had a $16 credit, close it out at $12.75 for a $3.25 winner. And then I also took another trade, but it was a $12.45 credit for a $14.40. So it was a loser of $195. So I had $3.25 minus the $195 netted out $130. That's my net little bonus on the day. That being said, we had a great class with my double ups. Way that I like to take trades in the service is I talked about this morning in my daily profit. So my daily profit plan, it's Watchlist Wednesday. We took a look at my scanner. Where is my scanner? Here's my pinch point scanner. I'm still going through the middle of these socks. I got through about 10 today. I'm gonna do some more tomorrow. So that was part of my Watchlist Wednesday. Double ups. If anybody's ever struggled with taking big losses, double ups might be your favorite thing ever. It's a low risk, always low risk, always low risk strategy. So we can basically just focus on managing our winners and not worrying about managing losers. I run strategies like this one where I trade every day. I have to always manage risk. I have to always manage losers. This trade, I have to manage risk. I have to manage risk. I have to manage risk. This trade is pretty even. This trade is all about high reward, low risk. This trade, we just have good volatility plays. We let the take profits hit. We just take conservative 30, 40, 50% take profits on scans that are looking for direction. These are really, really cheap. It's to help protect your portfolio. These are a little bit more advanced, a little bit more buying power, bunch of different trades that I take because this is where I'm the most discretionary. So point is, a strategy that is only focused on 5-to-1 reward to risk, 8-to-1 reward to risk, 10-to-1 reward to risk within a same day or one day environment. These are usually pretty short term. So the trades I took today, had a nice winner, netted out $130. I'll take it on top of the 33% winner that I took for daily profit play today. Overall, pretty happy with the result. The day itself, I want to see where the day settles, because if this is going to go down to 64.10, that is potentially a $1,600 winner. If we're going to go up somewhere, if we somehow rally up to like 35 or 40, this one is pinned at 64.50. So I'm just curious where the day were to settle and see if there's like a big fat winner there somewhere. I think that price is probably going to hang out somewhere between this like 20 and I'll show my software here. So somewhere between, current price around 64.20 and 15. Those seem to be where the bigger order flows are coming in right now. Obviously price can go up here and we see like the live levels fill up a little bit to the upside. But if we just are pausing, make our way down, maybe make our way down, I think that the 15 to 10 zone looks pretty promising. I will be a little disappointed in myself if we pin at 64.10 because that was a $1,600 winner today. But obviously I'd have to hold it all the way to the close. And I didn't feel like doing that. So audio is now excellent. Okay. Hopefully we're good. How was audio with everybody? Audio for a Wednesday, audio for final hour, audio with this sweet microphone. Okay, what else is going on? Hit a fresh high on the year. 436 is my new high for the year. Hopefully there's plenty more to go. September, I share this thumbnail. Okay, the September scaries. I'm doing this like this isn't for real. I'm just saying that there is a legitimate historical decline during the month of September. Okay, I have a screenshot right here. I showed this on my Edgefinder software. That's like the average, Nasdaq declines like 0.74%. The average S&P down for September is like 1.04%. So a 1% average decline over the last like 40 plus years. So let me go into this, and there's a chart. It's been the worst month for stocks. Average monthly returns S&P 500 for the last 24 years. It's funny how this is the only down month. It's the only down month. Crazy, right? It's like, what is it about coming out of summer trading? It's just like this weird self-fulfilling like September effect. And then I don't know. I think it's just because a big factor is tax loss harvesting. A lot of people dump their crappy positions and they realize, look, what's been making me money this year, I'm going to see if I can make more. What's been losing me money, I just want to get out of these trades. So that's usually what happens when it comes to summer like reallocating or summer adjustments is what are we doing to finish the rest of the year? What's been producing good gains is likely going to continue. So let's ride those winners. And if we have to, sacrifice some crappy laggards along the way, then you dump your positions. And that's where the September effect is usually um, taken. That's what it's kind of the cause. So we'll see. But average about 1% to the downside of the last 20 plus years. Now, that also means we could have a wick. We could have a drawdown of maybe 3, 4, 5%, but then the market might find a bottom rally back up. Okay. So going to the charts, Lyft is a nice little run. I was checking this one out. I had a chart alarm go off. Let's check the advanced decline for the day. So if we go to FinViz home, we have about 61% of stocks declining. Apple is up, Google is up, a lot of other stuff is down. Look at energy today. Energy is bloody red. CVX down, XOM down, COP down. Google up, Tesla up, Apple up, Microsoft, Oracle, Palantir, Nvidia down. Some of the other semiconductors down. Financials down. Healthcare was a green spot yesterday, but it's down today. So yeah, 60+% of stocks declining. Tobacco, Philip Morris down 3%. It's interesting. That usually is pretty defensive. I mean, it's had a heck of a run though. 93. It's doubled in price for a dividend stock. That's pretty impressive. A 3% dividend. Go to MO. Oh my gosh, man. I bought the stock at $40 with zero intention of trying to hold this thing to, $60. But my gosh, it got there fast. Previous all-time highs at 77. If we get any pullbacks here, I think that MO is not a bad trade. I did close out for my project options edge. I closed out a variety of puts on this one. So this service right here, we had a kind of like a stacked put order. I don't recall the strikes, but I think it was a 57.50, a 55, a 52.50, and a 50. I just stacked up a bunch and not a bunch, but I took 4 puts, and we collected over $800 of premium, and I think I closed it out for like $700+. So I pulled in most of that profit, got a bunch of buying power back. I've raised some capital. If you were with me like last week when I closed out a lot of my trades for Project Options Edge, I was trying to get my two. It was like buying power was about 2 million. Now it's 2.386, almost 2.4 in buying power. So I am happy to say that I'm back over 50% cash, and I say that like kind of reluctantly, but saying that like whatever good opportunities come our way, I've got capital to deploy. So if we see a 5% correction, 10% correction, I'm probably deploying some capital. SPY and QQQ. Yesterday this was up to like a 20 plus IV rank. The QQQ is up to a 20+% rank. Now it's 18.5 and it is 16.1. The VIX yesterday was up into the 19s. So I was jumping in and selling some premium, hopefully going out far enough to get some nice trades on my waterfall income. So we used strategy 2. We took a nice trade. We took 2 trades yesterday, one in the SPY, one in the Qs for waterfall income. All right. What are the charts? What are the questions? Take a look at dollar index. Let's go currency strength today. Do a little macro, a little top down. Here is currency strength on the day. So not a ton of volatility, 30 and 30 vertical axis. This is the Aussie and the pound. This is the Swiss dollar and the CAD. Not a lot of volatility overall. I don't know, man. It just seems like volatility is really, really, really suppressed right now. The dollar's not doing much. I think if any type of like risk off happens in the dollar, risk off tone in the markets, maybe give the dollar a bid. The dollar might rally up to like 100 or maybe 101, but I think this dollar runs into some firm resistance and then sells back off. We could also see a larger secular bear market on the dollar back down to like 92 or 90. I've got this measurement. This is wave 1, wave 3, wave 5. I mean, we could get all the way down to like 87 on the dollar. I'd be happy at 90 if I'm going to sell this thing. So it's kind of waiting for patterns. And we're now up to 64.30, which means my iron butterfly trades that I talked about for my double up service are now not looking great. This trade is actually at a loss, and this trade is a loss. So that's a big difference. Netting $130 versus now being upside down about $200 to $300 and kind of being in no man's land. I do have this drawn out on my charts. I put this on right here. So these are the two trades I took. I've already taken profit on it. Was when I was in this area. I took profit for $130 net. So I lost this trade. I won this trade, and it netted me 130. Now, watching how this is going to settle, if price is right in here, that is the worst case scenario. I would have been risking about $655 in the middle. In this area, I have a potential $1,250 profit trap. In this area, I have a $1,600 profit trap. But where are those profit traps? Well, price would have to be at 64.50 or 64.10. This one was within 20 points. So 20 points, and this one was within 20 points. Actually, no, 15. I'm sorry. This one is 15 points plus or minus, and this one was 20 points plus or minus. So you can see that this bottom box is a little bit larger. So this is plus or minus 20. I'm just going to draw this out a little bit differently. This is a plus or minus 20. I'll just put this on the chart. So 64.10. 64.10 plus minus 20. And this one was 64.15 plus or minus 15. That's where my profit trap is. All right. What do we have here? What is the relationship between MO and PM? I honestly don't know. For the longest time in my portfolio, I had PM because it was Philip Morris. So let's go to Simply Wall Street. I feel like it's an affiliate or a spinoff. So MO. So Altria Group manufactures and sells smokable oral tobacco products in the United States. Maybe this is where they spun off to do like vapes and whatnot, but Marlboro, large cigars, pipe tobacco, Black and Milds, moist, smokeless tobacco. I mean, this seems like pretty old school. Copenhagen, Skoal, nicotine pouches. Which one has like, is it Zyn? What's the crap that everyone buys now? Zyn pouches or whatever. Vapor products. All right, let's go between that and PM. Philip Morris International operates a tobacco company. So there's your Zyn. I mean, it's funny. They're two different stocks. They sell the exact same thing, and it was, to my knowledge, like it was just a spinoff. So they're both good. I just think MO. I like MO because it's a lot cheaper. If I want to sell puts, I mean, this puts at 66.58 versus doing a PM. It's up into the 180s, right? 162. That's a lot more expensive stock. Let's take a look at the IV rank. Let's go MO. Got an 11.2 IV versus PM. 34.8. Big difference, but it's also a lot more expensive. So which do I like more? I really don't care. I want a better trade. It's cheaper for me to probably trade. It's probably cheaper to focus on MO. Beta wise, this is a 0.03 beta. So very, very low correlation. And MO is a 0.01 beta. So neither of these correlates with the S&P, which is why I took the trade last year and held this thing for like the $40 buy. It did pretty well for me. It's also a pretty high dividend stock. This is 6.32. PM is a dividend of 3.23. I'm not saying one's better than the other as far as trading it. I kind of like MO, but here's what I'm going to look at. If I want to do MO, let's say we pull back into like the 50s again. I'm going to go out to next summer and just see what this price looks like. So MO, let's go out the next summer into June. And can we get some premiums at like 55 and 52 and 50? I can get $374 on this trade. Okay. The probability of this thing pulling back that aggressively is pretty slim. If I took ownership, it'd be in the low 50s. That's the channel. I mean, I still think this stock has what it takes to get up into the 70s. All-time highs at $78. If we're just going to make little pullbacks and runs, I mean, let me see. If I did 4 stocks right there, it's like I did this exact same trade and pulled in like $8 credit. Now, because it's a little bit further out of the money, I'm getting, $5.81, but there's still a pretty good chance of profit. Now, as far as my margin accounts go, it doesn't tie up a lot. If I had 400 shares, it'd be 50 and 52.50 and 55 and 57.50 divided by 4. I'd own the shares at 53.75. And if I collected 580 on the trade, so it's probably not 580, but I'm just going to do the math. Probably closer to 550 on the trade. 550 divided by 4 be another $1.37. So my net on that trade would be I'd own shares at 53.75. I'd own the shares at 52.37. 52.37 on this stock. If we drop 52.37 would be, this stock would have to drop 21.5% for me to take on any real risk. Otherwise, I'd use it, I'd keep the dividend, and I would repair the stock and try to grab some bucks. Okay. So I think I'm going to take this trade. I wonder if we're going to get a deeper pullback here. I think we might. I think I could probably get a little bit more premium if I hold out and just wait if this implied volatility goes up. But obviously, if the market's going to somehow drift higher, going up into like 70, 75, or 80, I still want to take this trade. So I think what I might do is take the trades here, try to get like 570, see if this will fill for some of my margin accounts here. It's only going to tie up $2,700 in margin. I got plenty of capital. Filled at 570 credit. That's a good fill. I'm pretty happy with that trade. So I'm going to go for my margin accounts here. 1, 2, 3, 4, 5, 6. Okay. So I'm going to put this trade on for a few of these margin accounts. This is going to be a trade. I'll put this in Project Options Edge. If I've got some traders out there with some more margin and some capital to work with, I'm doing some naked puts here for 570. Okay, 1608. So 7. Okay. Almost there. All right. Add that in. So this is PM, MO. Get out of here. MO, all margin accounts. This is the June 18th expiration. Selling the 57.50 put. Selling the 55 put. Selling the 52.50 put. Selling the $50 put. Pulled in $5.70. Actually got filled at 5. Some of these fills are good. 570, 570. Got filled at 581, 592. I'm just going to put 570. That was my lowest credit. So 570 credit. Willing to own shares. So break even if I'm assigned. Oh my gosh. This price is going up. Maybe we get a freaking 35 or 50 run today. Crazy. Let me get the break even. So I did break even of 53.75 minus, I've got 5.70 divided by 4 minus 53.75. So break even would be 52.32 if assigned on all levels, and I keep the 400 shares. Okay, not bad. Adrian, let me see your question there. If risk off happens, would that mean gold and dollar up at the same time? I mean, gold's already up. So, I mean, gold's probably just going to stay up, maybe have some volatility, but most likely just try to push higher. I think that the dollar catches a bid. Dollar catches a bid, heads back to like 100 or 101. And again, like I don't know how much risk on or risk off we're going to have. I mean, look at today. It's like this market just doesn't give a crap about anything. It's like, yeah, we'll just go back and be up a little bit on the day. We opened up positive, right? So the market is still positive based on the close from yesterday. So the markets today are actually up, right? SPX up 0.29%, SPY up 0.31, Nasdaq up 0.54. The Dow is flat, down 0.28. Russell is down slightly at 0.3. VIX at 16.6. I mean, VIX really didn't go anywhere today. Bond volatility move index is, let me go back to VIX here. So move is, where the heck did the index go? There we go. Up a little bit. DXY, maybe catching a little bit of bid on the daily time frame. But really choppy. The dollar is extremely choppy. Just be aware for some price manipulation. If the dollar, comes down briefly and tries to test this low, I could see that as a buying opportunity. Obviously, if the dollar, we are on the right hand side of this recent trend line. So if the dollar is just going to make a run for it, where we have, this low is in, we're going sideways here. If we break above this level, we probably have a bit of a squeeze trade. Low to high, higher low, higher high. This also would be like this kind of a fancy harmonic pattern. X, A, B, C, D, something like that on the dollar. And then it comes back down to where it started. So I just think that the bid on the dollar remains. I've said this for a while. If you're going to buy the dollar, you buy it small, and you buy it small. You stop yourself out below that level. If it wants to go up and squeeze, we come back to the 144, the 200 moving average. Get out of the trade with a good reward to risk. If you're wrong, get out quick. Okay, we're at 35 right now. Crazy. So let me check. I'm just going to have some fun checking those SPX trades. I'm glad I got out, but I'm obviously curious to see where they went. So SPX on the day, that $16 trade is now trading for 19 bucks. I'd be down, $320 on that trade. This 1245 is now trading for $12. That's not a good thing. Like I'd be down, 300 and some dollars and then up 50 on the other. Again, these trades just for fun. It's like I'm already out of the trade for profit, but I'd have to see price get up into probably, I'm trying to think here, that the spread was the 35. So yeah, I need to see price get up into like 64.40 for me to see some profit on this one. So 64.40 kind of covers risk of the other one. Closer to 64.45 is a nice big fat profit trap. That'd be like $700. So very curious to see how the day finishes. But the net result for the day is just market makers doing their thing. Guardrails on the markets, choppy. We didn't have anywhere close to the high or low. Did I have anybody that's watching today that was in my daily profit play this morning that took some profit this morning with me? Got filled for $1.20, got out at 80 cents, took a nice 33% winner. A lot of traders that like the standard daily profit play, selling the puts and the calls. You probably had a nice setup today because price really didn't do anything. We're right back where we started. Price opens up here at 44. We're trading at 36. We're within 8 points of where we started the day. So all in all, that's a pretty good like nothing day. All right, what else we got going on from top down? Natural gas, oil. Let's go back to put this on SPX here. There we go. Let's go back to oil. Oil is at 63.90. I don't know. I think everyone hates oil so much. Everyone's super bearish on oil. I'm not bullish on it either. But if I'm going to see oil do anything, it's like maybe it just holds at 60 and rallies from there. Maybe it does nothing other than making lower highs, making equal lows, and it gets really messy in the 65 zone. I don't really see oil doing much of anything, which is okay. If you like to trade oil, probably strangles on oil futures work just fine. But just make sure you're not doing anything silly with that risk because one silly move in oil can bust up your account. Natural gas, said it was a good spot to buy. I'm still trying to get out of some UNG positions. Gold, another notched high. We're at all-time highs again. We've had a heck of a run here. I mean, of this little cycle, this low, you're at 11 bars and like 9 of them have been bullish. So it's a pretty good breakout. I've talked about this like ascending wedge. So right there with resistance and right here with support, and we broke out. So, does gold have room to run? Obviously it does. So if we're breaking out and it stays here, maybe a pullback, but this probably just has open space to keep drifting higher. I don't know how bullish gold is going to get. We talked about this morning in profit panel. If you joined Jeff and I, 3,800, I think, is a pretty big stretch. I mean, we're already right now from current price, we are around 12% above the 200 moving average. We're at almost 490 bars away from the moving average. Now, the history lesson here is going back to 2009, 2011. We reached about 25%, 26% away from the 200 moving average, and it lasted over 600 bars. But at that 600 bar stretch, this thing came crashing down like 20%. So whatever happens here, if gold keeps going higher, if we have this ascending wedge, maybe retest this high, okay? So let's say that price comes down and tests. Well, a good opportunity there would be to buy with a tight stop loss and see, does this thing come back up and keep climbing? Maybe it does. All I'm doing on gold is selling puts. I hate buying highs. We're sitting at all-time highs. I'm running with silver. If we get above the $40, $41, $42 area, silver, I think, can go to 48, 49, $50. That's my target price on silver. Okay. I'm actually going to be pretty sad if I take profit in silver because it's been such a good run. SLV, along with the other ones, have been pretty nice. So SLV, where are we at here? SLV is up about $58,000. I mean, the nice part is there's another like 10+% to go. If I go to XAG, marking my all-time highs, I mean, there's another 16 to 17%. So if I get that on top of 58K, so 58, I mean, that's not too bad. Another $9,000 on top of that. So I'll be close to like 70 grand on silver. But I also might try to use these moving averages to buy some dips. If we pull back into this cluster of moving averages, maybe establish these some more puts and trying to get long. So it's looking pretty good. And speaking of, it's 353. Price is up into 41. Just going to spot check this trade here. Just like that. It's up. It's pretty slippery here in these last 10 minutes, but that trade is up around $300 right now. But the other one is down, probably max. This one is down pretty much $4. This one's not enough to cover. So I really thought going into today's session, I'm going to be like, I took $130, but I could have made $1,000. But turns out I would have actually been about break even right now in the final 5 minutes of trading. So I'm glad I didn't do that. But this trade is trading for 940, so it's up about $300 right now. It's still just barely off a break even. But if price goes up to 45, then it's looking a lot better. Because all of a sudden 45 puts us up another 4 points. That's another, $400 of profit. So just like that, the profit potential is there in these final few minutes. But what a crazy little run we've had here. Look at this price action. I just finished that double up class. If I've got Oscar in the room, Oscar was asking, do these levels change? And I said, yes, they do, because we had a bunch of levels down here that was in a 0-day environment. And look what happened in the order flows. Look at that thing. Just completely changed these last 15, 20 minutes. So it's kind of nice to track real-time order flows. We went from 21 to freaking 41 in 20 minutes. Like, that is not a normal move. But that's why 0DT is kind of crazy. It's all reward and all risk. You got to manage it. So let's see where the day settles. It looks like this bigger price at 44, 45 might be up there. I mean, look at this thing. You got to give the markets credit. Like, final 20 minutes, this just does something completely stupid. I mean, this is more movement in the last 20 minutes than we've had literally the entire day. Right? Down a little bit, up a little bit, down a little bit, flat for a while, down a little bit, flat for a little bit, and then just out of nowhere, all direction, all in 20 minutes. And you're either right or you're wrong. Like that's the scary part about zero DD. If you're wrong, I mean, it's so easy to lose money. But if you're right, you're looking pretty good. 44, look at this bad boy. This thing's now trading for $7. This is now up $500. Crazy. Well, that'd be a nice winner. Let's see if this thing settles. We'll see. If it's up to 45, that's a $500 winner. If it's up to 50, that's a $1,200 winner. So we'll see. I'm curious in the next 4 minutes where this thing settles. So I got to do the math. I mean, if we're at 64.45, that's good. 64.50 is ideal. Below 64.40, it gets a little bit less profitable. Okay, what else do we want to take a look at? We'll spot check this for the next couple of minutes before the close. Gold is up, silver's up. I like all the dips. If we get any dips, I'm buying dips. So gold, this one I want to pull back more. Silver, I like a lot more as far as like we haven't hit all-time highs yet. I'm going after all-time highs. If we get a pullback on silver, I'd love it. I'd love a pullback to 38, establish some new positions, probably trade some gold or some silver futures, and then get long again. Maybe it ranges in here, but I still think we're going to break and go higher. So my target is pretty much all-time highs, which is 2011 and 1980 highs. That's up to about $50 spot price. Okay, Joy says this close on I was happy to close positions. Good, Joy. What'd you do? What'd you do today for positions? What'd you have? Kept ripping. Yeah, I mean, what we're seeing here the last few minutes, this is just a pretty silly price action. I mean, the day was already positive. It's coming right back to where it started. We opened up higher, we slid. I mean, look, this is like pretty efficient price action today. You don't see it all the time, but what price do today? Well, we opened here. We came right back to test this gap. We opened here, right? That was the close from yesterday. We came back to test the gap. So price didn't really do anything for the entire day, but what did it do intraday? Well, it just tested two levels. We tested support here, and we tested what was a high became support here. So it just was price action, like kind of impressive when you look at it that way. The nice part is where is this trade going to settle? So this would be if I'm at 35 or better makes money. We're at 41. Ideally, I'd like to see this at 45 or higher. So if it's 64, 45 or higher, that's a good thing. Back down below 40 is not great, but 45 or better would be good. SPY 0DT was down a lot, did last minute gamble, try to get some back. It worked out, covered losses. Okay. Yeah. Enjoy the grinder. Nice work. I mean, I'm a big believer, whatever it takes. I don't care. I don't care what strategy I take. I don't care what type of trade I have to put on, bullish, bearish, spread, whatever. It doesn't matter. I'm trying to make money. So sometimes that's what you got to do. Get your hands dirty. Okay, we're probably settling here right around 45. Let's see if it gets there. Maybe pops up a little bit higher. That trade is now 1245 down to 630. It's up $600. That'd be totally worth the close. Just take the profit. And up to 44, up to 45, getting better. Yep. Now it's up. So that was quick. It was under $6 there for a second. That'd be $645. Yep. Now it's up $700. So we settled at 46 and change. 6446. That would have been a settlement of, looks like around, that's pretty good. That's like a $900 winner. Wow. What's funny is I taught a double ups class, and I thought, man, there's probably not any way that we're going back to 63.50 today. And look at this thing. What a difference 20 minutes can make, huh? So this trade would have settled for about $900 profit, while the other one would have lost about $400 profit. So net, a $500 winner on the day. It's not bad, but holy shnikes. That's a wild and crazy price action. Joey says sold some of your highs of the day for credit. Yeah, we were looking at like the 60s and 70s and 80s. I didn't go wide enough to get the fills that I wanted, so those didn't fill. But good work clawing back, and good work on the day. Net positive. I mean, I could have asked for a better close. Right here in the middle is where I wanted it to be. 650 plus or minus 15. We're at only. I mean, this shows a settlement at 48. Tasty shows a settlement at even better. Yeah, man, that's up $900. 900 $940 minus the $400 max risk on the other one, so 540 overall. Not bad. Let's see here. 56 cents closed at 272. Nice. Oh, I gotcha. So you still got out for some profit. All good. Okay, well, guess what? Tomorrow's a new day. So we'll come back and tackle this tomorrow. All in all, happy with the win. Daily profit play was a winner. Had a great masterclass with double up alerts. We'll do it again tomorrow. What else? Waterfall income. We're active this week. Double ups masterclass tomorrow. Pinch point. I've got some trades to price out. We took a hedge last week in class. Project Options Edge. I added some new trades. And daily profit play. Come back and grind with me again tomorrow. Daily profit play tomorrow morning, 9 a.m. Eastern time. If you would like to ask or inquire about any of my services, you can check out my website, chrispulvertrading.com. You can send my team an email, support@prosperitypub.com. If you're in any of my services, any of my members can reach me, chrispulverpub@gmail.com. So, all right, let's come back and grind tomorrow. Daily profit plan, 9 a.m. I will see you tomorrow for Trending Thursday. News-wise, tomorrow we have ADP jumbers coming out at, I think it's 8:30. We have the ISM services number coming out at 10. We have the unemployment claims at 8:30. We have the ADP at 8:15. Is this going to be a big mover compared to non-farm? Probably not, but it's enough to maybe get the markets paying attention. Cool. And then non-farm on Friday, 75K is the forecast. 4.3 is the expected unemployment. That's up 0.1%. And we'll see what the job numbers are. We'll see what the revisions are. That's one thing that's been so depressing about the jobs picture is it's not a firing problem, it's a hiring problem. Nobody's hiring. So it's kind of like a labor market freeze right now. The only jobs that are coming into the industry are healthcare. That's it. It's like services and healthcare. That's the only growth we see in jobs right now. So there is definitely a plateau in jobs, and that's why everyone's concerned about the Fed and what the Fed's going to do. And they're going to cut. They're going to cut rates. It's pretty simple. I think Jackson Hole pretty much cemented that. So go to the watch tool, and we're probably at 90+%. Yep. 95.6%. We're going to cut. And this is a 25 basis points cut. Looking for a cut in September, and the edge goes to October for another cut. We're looking at 1 to 2 cuts by the end of the year, and then another couple of cuts. We're looking at 5. 1, 2, 3, 4, 5. This is potentially 6 by the end of 2026, but I'd say between 5 and 6 cuts. So we could be at 1.25 to probably 1.5% lower on the short end of the curve. And we'll see what the bond markets do and the yields do. So everyone's been like short bonds and thinking it's the greatest thing ever. It's like, I don't know, man. It might be a good trade. I think bonds at these levels are probably more of an attractive buy, but that's for some type of like risk off. It depends on what yields do. I mean, I don't know if yields really do anything meaningful. They might just stay sideways. Everyone thinks they're going to 4.8. It's going to crash the economy. Everything they're going to improve and get down to sub 4%. They probably won't. They're probably going to be sticky. You take a look at your 10 and 2 year. It's disinverted. You take a look at the 10 and 3 month. It's at the zero line. Like neither of these are good. When you come out of an inverted yield curve into positive territory and disinvert, usually a recession is not that far around a corner, but like literally the timeline could be, 2 to 3 years out. So we disinverted in September of 2024. It's only a year away. Like we're a year off of this. That's still, there's plenty of time to have this stay disinverted and not have a recession. The 10 and the 3 month, we disinverted in December. It's not even a year away. So inverted yield curve, it's like, I don't even know if that works anymore. We had the longest and deepest inverted yield curve in history. Nobody seems to care, right? Weak NFP will add more cuts, maybe. They're already cutting a lot. Look at this. Add more cuts in what degree? 1, 2, 3, 4, 5, potentially 6 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I mean, out of 11 meetings, you're going to cut 6 times. That's a lot of cuts, right? It's a lot of cuts. And I wouldn't say that, Lee. Jolt's down, ADP is tomorrow. That has nothing to do with the non-farm numbers. They're so not correlated. I would just say take it one day at a time and just trade. So we'll come back and do it again tomorrow. Cool beans. All right, daily profit plan tomorrow, 9 a.m. All are welcome to join. I run this thing live every single day. I'll share a couple links for you if you'd like to join my Telegram. You are more than welcome. It is free. Here's my Telegram. So we have Chris Pulver Telegram. If you'd like to trade with me in my daily profit plan every single day, here's a link for that. Daily profit plan weekdays, Monday through Friday at 9 a.m. Eastern time. So a couple links there. And daily profit plan weekdays at 9 a.m. Eastern time. I run this on Zoom and youtube.com/financial wars. There it is. Okay. And we'll come tackle it tomorrow. Trending Thursday. Let's see what's moving and shaking. Markets for the week are still in red, but not by much. Seriously. The market started. That was last week's close. We opened in the hole. We are trying to come back to it, but let's see what tomorrow brings. Right? Is tomorrow going to be a day that even matters? Is it going to be like another sideways day and then all about non-farm? Are we up to the top? Are we down to the low? We'll find out. Let's tackle it tomorrow. Okay, good stuff. All right, before you leave, kindly take a split second, hit that thumbs up button for me. YouTube.com/Chris Pulver and YouTube.com/Financial Wars. Subscribe if you haven't. Content like this, all the shorts, all the videos, all the content. If you like those videos, like that content, it does help support the channel and get this video stuff out there for others that could be helped. All right, I'm going to let you go. Have a good day. I'll see you tomorrow. Thanks. Bye.